All right, so let's break down what investing in gold actually means. Investing in gold doesn't only mean taking your grandma's old jewelry and pawning it. I mean, it can mean that, but it probably isn't the best idea. And these days, investing in gold comes in a bunch of different ways. The first one everyone obviously thinks about is the physical one, like gold bars, gold coins, and yes, your grandma's jewelry. The stuff that you can actually touch and hold. Other forms include things like gold mining stocks, gold IRAs, and gold ETFs, as well as digital gold. And digital gold, which are some newer methods. So if someone says they're investing in gold, they could mean any one of those things that I just mentioned. I know this is already sounding super complicated, but I'm here to answer the big question. Should you actually invest in gold right now? But before we answer that, you have to understand why gold even matters and why you should even care about it. I mean, we're in 2025. We already have crypto and 100 different stock apps on our phones. So why do people still care about gold even though it's been around forever? Well, the answer is simple. People have been using gold for thousands of years. Way before paper bills or credit cards were even invented, gold was how people traded, saved, and most importantly, showed their wealth. And today it still holds its reputation. So why is everyone suddenly talking about gold in 2025? I mean, gold's been around forever, but lately it feels like it's back in the spotlight. And here's why. First off, inflation is still a thing. Yeah, the Fed says it's cooling off or slowing down, but let's be real, everything still feels really expensive. Grocery prices are wild, gas, don't even get me started, and rent, it makes you feel like you need a second job just to pay it off. And this is making people notice that their money isn't stretching as far as it used to. When that happens, they start looking for ways to protect their savings from losing value. And that's where gold enters the chat. Another big thing is the stock market. It's been moving and not in the way that we like to see. One week it's up, the next it drops and it bounces back again. And to be honest, if you have some money in the market right now, it probably feels like you're on a roller coaster ride that you didn't sign up for. And while some people like day traders may thrive in that chaos, normal people just want something that feels stable. And that's when they start eyeing gold, because unlike stocks, it doesn't fluctuate as hard when a tweet, headline, or earnings report comes out. So here's the $1 million question. Should you invest in gold? Like, is right now the right time or should you hold off? Let me jump in and break down the pros and cons, starting with the pros. Number one is it holds its value. Gold has a track record. When the world gets messy, whether it's recessions, wars, market crashes, gold has a habit of staying steady and sometimes even going up. Investing in gold isn't about making a quick profit. It's about holding and preserving what you already have. And for some people, especially during uncertain times, stability matters more than higher returns. Number two is it's physical, whether it be bars, coins, whatever you prefer, it's solid and it's real. It's not like a number on a screen or a stock in an app. It's something that you can literally hold. And let's be honest, you can't hack a gold bar. You don't have to worry about your account being frozen or your crypto wallet being locked. It's yours. Number three is it's a hedge against inflation. When I say hedge, this is something that you buy to protect your money from losing value when other things like stocks or the economy start to go down. And one of the biggest reasons people turn to gold is because of inflation. This is when inflation goes up and your dollars don't go as far as they used to. While paper money tends to lose value over time, gold kind of does the opposite. It tends to hold its value or even go up, especially when inflation is rising. Put simply, when the value of the dollar goes down, gold usually stays steady. The next pro is that it adds balance to your portfolio. Let's say most of your money is in stocks or crypto. I mean, that's cool because those things can grow fast, but most people forget because it can grow fast means it can also drop just as fast. Where on the other hand, gold is just chill. It doesn't move as wildly, and that's the good thing. By adding gold to your portfolio, you're adding balance. So if your riskier investments dip, your gold can help balance things out. Now let's talk about the cons of investing in gold, and I'll run through these pretty quickly. One is it doesn't generate income. Unlike stocks that pay dividends or real estate that gives you rent, gold kind of just sits there. It looks pretty, but it's not paying your bills. Number two is storage can be a hassle. If you're buying physical gold, you need to keep it somewhere secure. That means safes or security systems, all of which can be broken into or worse, even stolen. Number three is that prices go up and down. Just because gold is known for being stable, that doesn't mean that the price is always steady. Gold still has its ups and downs. Sometimes it jumps and dips, and sometimes there's no clear reason why. So if you're thinking about investing, don't just think that it's a guaranteed straight line upward. For example, if you get nervous and you sell too early during a dip, you could end up taking a loss that could have bounced back if you just held. Gold can be a solid long-term play, and it's definitely not a get-rich-quick move. You have to be patient. The fourth con is going to be scams and overpriced gold. If you're buying gold from the wrong place, you can be ripped off. To be honest with you, not all gold dealers are playing fair, and if you're not careful, you could overpay big time. Some companies mark up the gold prices way more than what they are, especially if they're selling to first-time buyers. So before you buy, do your research, and most importantly, stick with reputable dealers. Compare their prices and don't fall for flashy sales tactics. If it sounds too good to be true, it probably is. Okay, so how much gold should you own? And this is where a lot of people overthink. You don't need to turn your entire investment account into a stack of gold bars. Going all in on gold just isn't the best move. According to an article from CBS News, most financial experts only recommend that you keep around 5 to 10% of your overall investments in gold. This ties into something called the 10-5-3 rule, which is a simple guideline that helps people balance their investments. You create balance by diversifying your investment portfolio. You want to aim for about 10% returns from stocks, 5% returns from bonds, and 3% from more safe options like cash or gold. This is enough to give you protection without going overboard. To keep it simple, let's say you have $10,000 invested. You would want to have around $500 to $1,000 in gold. All right, so if you're thinking I'm down to put a little bit of my money into gold, here's how you actually do it. Number one is physical gold. This is the classic route. Actual gold that you can hold in your hand like coins or bars. And like I said earlier, if you go this route, make sure that you're buying from a reputable dealer. That way you don't get ripped off. APMX and JM Bullion are two trusted websites that you can buy gold and silver from. These two places often offer fair prices and just full transparency. Number two is going to be gold ETFs. ETF just stands for exchange traded funds. If you want something more easier and hands off, gold ETFs are a solid option. A gold ETF is like a stock that you can buy that follows the price of gold. So you can invest into gold without having to own or store real gold. Popular ETFs include GLD and IAU, and you can buy these through regular stock trading apps like Robinhood or Fidelity or whatever is your personal choice. I think gold ETFs are a great option because you don't have to worry about the storage and security of physical gold. You just need to click a button, press buy, and you're in. And if you ever want to sell, it's just a few taps and you're out. So this is perfect for anyone who wants that exposure to gold but doesn't want to have to deal with the hassle of actually holding and storing it. Number three is going to be gold mining stocks. Now this one's a little bit different. Instead of buying and selling gold itself, you're investing in companies that mine gold. A few of these include Newmont or Barrick Gold. Put simply, when gold goes up, these companies tend to make more money, which means that their stock price can rise also, and in some cases even faster than gold itself. But you gotta remember that mining companies are still regular businesses, which means that they can deal with things like bad management, rising costs, or political issues. So this option can be considered higher risk, but also higher reward in some cases. The fourth way is going to be gold IRAs. Now this one's more of a long-term move, and to be honest, it's the one that I would recommend to most people to look into as soon as possible. An IRA, or an individual retirement account, is a special type of savings account designed for retirement. It basically lets you invest your money and grow it over time with some pretty decent tax benefits. And a gold IRA lets you hold physical gold as a part of your retirement plan. This way you're not just hoping that the market does well, you're holding on to something real. It's a great move if you're thinking long-term and you want something more stable in your portfolio. But be careful because not all gold IRAs are created equally. Some come with high fees, storage costs, and complicated rules. So always read the fine print and compare providers before you actually jump in. If you want a free gold IRA guide to help you break down all the complicated stuff and get started as soon as possible, check out the link in the description. Now, to be honest, gold isn't for everyone, and it's not always the right move depending on where you're at financially. So before you go put your money into gold, here are a few situations where you might want to hold off. Number one is if you're in debt. If you're carrying any credit card debt or high interest loan, focus on paying that off first. There's no point of getting into gold if you're losing 20% interest every month to debt. Number two is if you need fast returns. Gold is more of a slow and steady investment. It's not something that's going to double value overnight. So if you're looking to make quick money, gold probably isn't the right move for you right now. Number 3 is if you don't have an emergency fund. If you don't have money set aside for car repairs, medical bills, or job loss, that's what you need to focus on building first. On this channel, I'm here to help you guys make smarter financial choices. So before you invest into anything, gold included, you want to make sure that you have a solid system set up and a solid safety net set in place just in case anything goes wrong. Now, if you're sitting here thinking, Alex, how do I even get my finances in order? Don't worry, I got you. This is where Rocket Money comes in. It's a free app I use to track my expenses, kill any unnecessary subscriptions, and most importantly, just stay on top of myself and my bills every single month. Okay, since I'm Alex, aka your money friend, here's what I would tell you. Gold isn't the magic answer to wealth. It's not gonna make you rich overnight, but it can be a solid addition to your investment plan. If you're already investing in stocks, building your savings, and looking for something more stable to put your money in, gold can be a solid option. Especially in 2025 when you want something real and steady in your portfolio. Just don't go overboard and go out and buy a gold chain just because TikTok told you to do it. So should you invest in gold in 2025? The answer is yes. If you're looking to protect your money from inflation, balance risk, and have something real, then yeah, a little bit of gold could be a smart move for you. But just like anything else in finance, it's not about jumping into the trends. It's about having a solid plan and strategy in place. Diversify, do your research, and remember, building wealth isn't about being flashy. It's about being smart. If this video helped, drop a like and subscribe for more investing content. I'm Alex, aka your money friend. I'll catch you in the next one. Peace.